To enjoy a comfortable future, investing is absolutely essential for most people. Hi, welcome to our channel. In this video we list out 9 best investments in 2021. Before we start, subscribe to our channel and press the bell icon. Follow us on Instagram at StarFacts01. As the coronavirus crisis has demonstrated, a seemingly stable economy can be quickly turned on its head, leaving those who haven't prepared scrambling for income. But those who could hold on to their investments may have done quite well, as the market registered new all-time highs in the second half of last year. Investing can provide you with another source of income, fund your retirement, or even get you out of a financial jam. Above all, investing grows your wealth, helping you meet your financial goals and increasing your purchasing power over time. Or maybe you've recently sold your home or come into some money. It's a wise decision to let that money work for you. Here are the best investments in 2021. Number 1. High-yield savings accounts. Just like a savings account earning pennies at your brick-and-mortar bank, high-yield online savings accounts are accessible vehicles for your cash. With fewer overhead costs, you can typically earn much higher interest rates at online banks. Plus, you can typically access the money by quickly transferring it to your primary bank or maybe even via an ATM. A savings account is a good vehicle for those who need to access cash in the near future. Number 2. Certificates of deposit. Certificates of deposit, or CDs, are issued by banks and generally offer a higher interest rate than savings accounts. These federally insured time deposits have specific maturity dates that can range from several weeks to several years. Because these are time deposits, you cannot withdraw the money for a specified period of time without penalty. The financial institution pays you interest at regular intervals. Once it matures, you get your original principal back plus any accrued interest. It pays to shop around online for the best rates. Number 3. Government bond funds. Government bond funds are mutual funds or ETFs that invest in debt securities issued by the US government and its agencies. The funds invest in debt instruments such as T-bills, T-notes, T-bonds and mortgage-backed securities issued by government-sponsored enterprises such as Fannie Mae and Freddie Mac. These government bond funds are well suited for the low-risk investor. These funds can also be a good choice for beginning investors and those looking for cash flow. Number 4. Short-term corporate bond funds. Corporations sometimes raise money by issuing bonds to investors, and these can be packaged into bond funds that own bonds issued by potentially hundreds of corporations. Short-term bonds have an average maturity of 1 to 5 years, which makes them less susceptible to interest rate fluctuations than intermediate or long-term bonds. Corporate bond funds can be an excellent choice for investors looking for cash flow, such as retirees, or those who want to reduce their overall portfolio risk but still earn a return. Number 5. S&P 500 Index Funds. If you want to achieve higher returns than more traditional banking products or bonds, a good alternative is an S&P 500 index fund, though it does come with more volatility. The fund is based on hundreds of the largest American companies, meaning it comprises many of the most successful companies in the world. For example, Amazon and Berkshire Hathaway are 2 of the most prominent member companies in the index. Number 6. Dividend stock funds. Even your stock market investments can become a little safer with stocks that pay dividends. Dividends are portions of a company's profit that can be paid out to shareholders, usually on a quarterly basis. With a dividend stock, not only can you gain on your investment through long-term market appreciation, you'll also earn cash in the short term. Buying individual stocks, whether they pay dividends or not, is better suited for intermediate and advanced investors. But you can buy a group of them in a stock fund and reduce your risk. Number 7. Nasdaq 100 Index Funds. An index fund based on the Nasdaq 100 is a great choice for investors who want to have exposure to some of the biggest and best tech companies without having to pick the winners and losers or having to analyze specific companies. The fund is based on the Nasdaq's 100 largest companies, meaning they're among the most successful and stable. Such companies include Apple and Facebook, each of which comprises a large portion of the total index. Microsoft is another prominent member company. Number 8. Rental housing. Rental housing can be a great investment if you have the willingness to manage your own properties. And with mortgage rates hitting all-time lows recently, it could be a great time to finance the purchase of a new property, though the unstable economy may make it harder to actually run it, since tenants may be more likely to default due to unemployment. To pursue this route, you'll have to select the right property, finance it or buy it outright, maintain it and deal with tenants. You can do very well if you make smart purchases. However, you won't enjoy the ease of buying and selling your assets in the stock market with a click or a tap on your internet-enabled device. Worse, you might have to endure the occasional 3 a.m. call about a broken pipe. But if you hold your assets over time, gradually pay down debt and grow your rents, you'll likely have a powerful cash flow when it comes time to retire. Number 9. Municipal bond funds. Municipal bond funds invest in a number of different municipal bonds, or munis, issued by state and local governments. Earned interest is generally free of federal income taxes and may also be exempt from state and local taxes, too, making them particularly attractive in high-tax states. Muni bonds may be bought individually, through a mutual fund or an exchange-traded fund. You can consult with a financial advisor to find the right investment type for you, but you may want to stick with those in your state or locality for additional tax advantages. Municipal bond funds are great for beginning investors because they offer diversified exposure without the investor having to analyze individual bonds. They're also good for investors looking for cash flow. So that's all. Thanks for watching. Like and share this video, and don't forget to subscribe to our channel and press the bell icon. Follow us on Instagram at StarFacts01.